Good evening, everyone, and welcome to another Full Transparency Trading Session, FTT Teachings, Full Transparency Teachings. And tonight we're going to talk about psychology, balancing out your trades in the market, and the benefit of taking less trades and doing more with less than taking more trades. We're going to look at a bad week, or a bad month, actually, where we start out in June. Our first trade opens at few seconds before 1, we make $11. Things wick down at 1 o'clock, and we end up getting out with $11. It is what it is. Then we hop back in later on at 3:39 just to see if we can get some money, which is something that we shouldn't do, but it's micros. We lose $100. That's fine. We end the day out with a negative $95.70 day, 2 trades. The next day, we head into 4 trades. We start the market out with our normal 3 contracts for micros. We ended up losing $100. We get $190 from this next trade where we switch to a mini. And then we set up a trade for $500 take profit. We get the $500, setting up at 535 and going down to 510. Obviously, the market would fall a lot lower after that. And then, of course, towards the end of the day, it started rotating back up. So this is 9 a.m. This is 3:59 p.m. And we ended up taking the trade. Was it too many trades? Sure, we'll say it was, but not really. I mean, one to 5 is like where you want to be. You want to be in the wheelhouse of 1 to 3 normally. So the next day we start out, we lose $50 on micros, we get $14, and we get $13, and we just don't have it this particular day. We're just not seeing the flow, so we're like, you know what? Let's just take the little loss. So $29 loss, $488 week, right? Now starts out the next week. I would start out Mondays strong, right? Monday, Sunday night at 6 p.m., we ended up losing a 2 micro trade for 180, which was way too much to lose on 2 micros. I forgot to change my settings when I started the market out. Ended up losing $52, so now we're down 2. So now we just wait, and we're looking at where can the market go to. So we set up $1,000 trade right here. We get the $1,000. So now we're down $200, right? We get $1,000. We're down to 40. We get $1,000, and we're up 7 and some change. We could have been done right there. We should have been done right there. But comes the next morning, 3 o'clock in the morning, we get up, get into a trade, we lose $49. We're doing micro, so I'm looking at like we're losing small amounts of our other money that we have. We lose $150. We get $200 at 9:30 a.m. and then we get another $100 at 10:30 a.m. Yes, this is very much an over trading day where we could have just sat on this $1,000 win and called it a day and ended up the day with like $750 or whatever. And instead, we compounded our losses over and over and over again. And we had the trade again a couple more times at 9 o'clock. Either way, we should have been done. That's an easy one and done trading day. The next day, we took 8 trades. We get in 1 micro, 3 micros, 2 micros. So we don't even have consistent lots. 2 micros, 2 micros. Just trying to make something happen when we can't figure it out. We're going against the market majority of the time anyway. All right, the next day, we take 24 trades. And I say in this, never trade like this. I wasted a good $700 day guessing and stubbornly going against the flow of traffic. And then I went from a great day trading overall, and I made it out, is the key word. I made it out with $450, 24 trades. And the next day, because I didn't learn from this day, would be a catastrophe. This was just foolish. Look at all this. Look at all these trades. All this red, all these NASDAQ trades, all these big mini trades over and over again, losing 150, 170, 150, 170, 160, 170, 160. Just losing all day long and just revenge trading all day to try to get something going. And then we end the week on Friday with 58 trades and a losing week. Okay. We're not learning the hard lesson. Going to Monday, we started the day with $1,000 overnight. Okay, 2:30 in the morning, we set up our trade. It goes off perfectly. Wake up to $1,000. We did not stop. Why? You already made the $1,000 for the day. You don't need to make any more. This is a live funded trading account. Be responsible with it. Psych. Oh, we go on with the micros and more micros and more micros and more micros, and then we get a mini, and then we get more micros and more micros and more micros, and we end a $1,000 day with a $900 day because we were always trying to get back to that $1,000. That's all we were doing there. And then we go to the next day. We didn't learn our lesson. We're hard learners. And we do the same thing. Start the day with a loss, get $16, compound that loss, get $190, loss, and we're just losing and bouncing back and forth between NASDAQ and micros, just trying to make something happen. We don't have it. We're not going with the flow of the market at all. You can tell that we're going against the market because we're losing all these trades and the market is going up. So we're being counterintuitive. Okay. Next day, 15 trades. Why? Why are we taking 15 trades? $21 here, $40 here, $100 there. Just take one good trade and call it a day. Set a trade up. I wasn't setting up these days. I was literally just taking trades for the sake of taking trades. We start our day off at 8:23 in the morning or 6 o'clock at night the night before. 8:23 in the morning. We get to 9:30 in the morning. We're basically just jumping in on all the times where there's movement in the market. I'm not analyzing the market. I'm not setting anything up. I'm just jumping in casually. And then the final day of me just being like, all right, enough is enough. Start the day off with micros, make $10, get a NASDAQ, lose 160. Get the micros, lose 100. Doing micros, lose 107. Doing micros, lose 102. Doing 5 micros. Finally, we set up a trade. Finally, we set up a trade at 8:30 and we get 450. Guess what? We weren't good there. We weren't happy with that positive day. We went on to lose 100 right before 9, 72, 100, $200 loss. Get $55. Get $255. We're holding for 6 seconds. Now we're gambling. We're just throwing money in there. We're martingale system trying to get some money out of this. Okay, now we're going against the trend. We're going against the trend. We're going against the trend. This is just like going against the trend. Still going against the trend. Still going against. This time we're with the trend. Finally, we're in the trend. And instead of just holding the rest of the time, we waffle in and out 21 seconds, and we jump right back in. And then we jump right back in and lose. Then we jump back in and lose. Then we jump back in and lose. Over and over and over again, we did this. And then I reviewed that week and I was like, holy crap, I took 66 trades and I ended up the week with negative 328. The next week, so journal, I look at my journal. I don't trade Friday. I had already had a bad week. I just need to eat that week, sit back and go back to my foundation. And I start the next week off and I was like, our goal is to take maximum 2 trades. We win both trades. We can take a third trade, but we should just sit on our profits. So max third for the 3 trade window, right? I set up my trade and I want to erase all the bad that I did last week. So I'm like, I need a large move. We're going to set our trade up and we're going to set it up for $2,000. I'm risking $155 to make $2,000. If my trade is wrong, it's wrong. That's how I spend my trading days from this point forward. If my trades are wrong, they're wrong. I set my trade up. I go watch Game of Thrones. My trade enters at 10:50 p.m. It exits at 11:11 p.m. Make a wish. I got $2,000. All of that trading that I did last week, 66 trades to lose. I made $2,001 trade with 1 contract. That's it, one size, 1 contract. No guessing, no gambling, just analytics. Taking it on the 4-hour time frame, and I'm good. The next day, we open up our trading day. And we downsize the micros because I haven't done as much research heading into the day. It's 9:30. I set my trade up. We're heading towards the low, the $600 point. We break that. I get into the trend. I ride the trend down a little bit. I get $129. I'm happy with that. A couple minutes later, I'm like, you know what? I'd like to make it to $150. I enter a 1 micro contract trade. I get my $30 out of that, continuing the trend to the downside. And I'm done for the day because we had bounced back up. I set it at a resistance point. It enters at the resistance. The resistance is actually 640. I hit 639.25. As it's going down, I just closed out when I got above $150 because I just wanted a $150 day. Why? Because once you hit 30 $150 days, you can just take whatever money you want out of your account. You can take 100% out of your account at any point in time. But I like to get to that point of my trading accounts where I can just request money anytime I have a really good day or if I just want to take it all out, but never take all of it out because then you close the money down. So whatever you have left in your account, once you get to those 100% accounts, you can use that as your stop loss when you go back in. But this is an example of poor trading, a poor trading month leading into the start of the next month being poor, but then figuring some things out and saying to myself that, okay, these are the changes that I need to make going forward if I'm going to continue day trading. I'm not going to consistently be the same person that I was before. We're not going to trade emotionally. We're not going to revenge trade. Hell, half the time we're not even going to watch it. We're going to set a trade up, let it play out, and get our money. So going forward, we're at $2,140 on this account cash. We're going to grow that from here. So by the end of the week, we could be anywhere between $2,000 or $3,000, but we're not losing more than this $150 that we have extra so far going into the week. But this has been another full transparency trading session. It's not about, more is not always better in this particular style, in this particular lifestyle. Sometimes more is better. You need to learn how to do more with less in order to be a good day trader. If you can keep yourself below that 3 trade, 4 trade threshold, and you can consistently make profitable days and stack profitable days and not waffle between good days, bad days, good days, really bad days, really good days, really bad days, and instead have a consistent amount that you're bringing in. Like, I made $1,000 5 of these trading days. I should have $5,000 in this account. But because I kept trading on those days where I was making $1,000, instead I have a negative week leading into my new month. And now I'm at break even. Well, actually I'm at $2,000 or whatever, but I'm basically at break even with all of the work that I did last week that could have got me $5,000. So you understand? So you guys know the motto, take the easy money, focus on the 5 P's, get a process, be diligent in your preparation, have patience, manage your psychology, and take your profits. Again, this has been another Full Transparency Trading session where I'm your host, Sebastian. These are Full Transparency Trading Teachings, and I'm out.